So, let's talk about Ethiopia's economy, specifically how it handles foreign currency. For a long time, the rules have been pretty tight, but that's all changing. The National Bank just rolled out a major overhaul, and it's a really big deal. If you're an exporter, or maybe you have family abroad, or you just try to buy things online, you're going to want to stick around. We're going to break down what's new and what it actually means for you. What you're looking at here isn't just some minor policy update. Nope. This is a huge step in the economic reform plan that really got going back in July 2024. The big idea is to open things up, to liberalize the market and attract more foreign currency. And well, these new rules are pretty much the engine that's supposed to make it all happen. Okay, so here's how we're going to tackle this. First, we'll look at the massive changes for exporters. Then we'll bring it home and talk about what this means for you and your family. After that, we'll zoom out and see how the whole Forex market is being reshaped. And to wrap it all up, we'll look at what's next and the big questions this all raises. All right, let's dive right in. The first group that's really going to feel these changes, it's the exporters. The government is basically rolling out the red carpet for them, creating some seriously powerful incentives to bring more foreign money into the country.
This right here is the headline, 100%. Think about that. Before, if you were a service exporter, you had to turn over a big chunk of your foreign currency earnings. Now, you get to keep all of it. This is an absolute game changer, especially for folks in tech, consulting, anyone providing services internationally. So let's make that real. Say you earn $10,000 from a client in another country. You now keep all $10,000. No one's forcing you to convert it into birr. And crucially, there's no ticking clock. You can hold on to that foreign currency for as long as you want. That gives you total control.
And where do you keep this money? It's in something called a retention account. The best way to think about it is like your own personal vault for foreign cash, right there at your bank. It puts you, the exporter, in the driver's seat. You decide when to use it, whether it's for imports, paying for services, or just holding on to it. And it doesn't stop there. The reforms are slashing a ton of red tape. Getting paid upfront for your exports is now way easier. For foreign investors, getting profits out of the country is now handled by their bank, which removes a huge headache. And this is big. Foreign companies and NGOs can open Forex accounts directly without needing a stamp of approval from the National Bank first. It's all about reducing friction. Okay, so that's the big business stuff. But what does this all mean for the rest of us? Let's talk about the impact on you, your family, and the diaspora, because these changes are very real and very practical. The main theme here is making life easier. Got a kid studying abroad? You can now pay their tuition straight from your Forex account. Same goes for medical bills overseas. And hey, for all you online shoppers, this opens the door to using international cards. The amount you can send for family support is up to $3,000 now, and you can bring foreign currency into the country without having to declare it. Huge. Now, let's talk specifically to the Ethiopian diaspora. You all are such a critical part of the country's economy, and these new rules are designed to make it much, much simpler to connect financially with home. And here's the magic number for you. 100 US dollars. That's it. That's the new minimum deposit you need to open your own foreign exchange savings account. They've lowered the barrier to entry so much, making it incredibly easy for more people to save and invest back home. Let's just break this down one more time. For parents with kids studying overseas, it's a huge sigh of relief. For the diaspora, the door is now wide open to banking in Ethiopia. For families, it means the potential for more support. And for online shoppers, well, the global marketplace just got a lot closer. You see, these aren't just policies, they're real, tangible improvements to daily life. All right, let's zoom the camera all the way out. Because beyond helping out individuals and exporters, these new rules are meant to shake up the entire financial system. We're talking about giving a lot more power and flexibility to banks and Forex bureaus. Okay, before we dive in, we need to know this term, forward exchange. It sounds a little technical, I know, but the idea is actually super simple. Imagine you need to pay a supplier in dollars 3 months from now. You're nervous the exchange rate might get worse. Well, a forward contract lets you lock in today's rate for that future payment. It's a fantastic tool for taking the guesswork out of business. And here's the big change. Banks used to have to get a green light from the National Bank to do this. Not anymore. That requirement is gone. Banks are now free to offer these services, which should help create a much more stable and sophisticated Forex market where businesses can actually plan ahead. Now, check out this difference for the Forex bureaus. They used to be limited to holding only 10% of their capital in cash. That number has now jumped to 25%. That's more than double. In simple terms, this should mean more foreign cash is physically available when you need to make a transaction. It's all about improving liquidity.
And the support doesn't stop there. The National Bank is going to help bureaus with working capital. Banks are getting more power to guarantee loans. And even small things, like letting bureaus handle payments for visas and licenses, are all part of a bigger plan to build a stronger, more resilient financial backbone for the country. So we've gone through the what, we've seen all the details. But what about the why? And more importantly, what's next? In this last part, let's look at the really big picture, the road ahead for Ethiopia's economy. If you strip everything else away, the strategy comes down to one word: liberalization. The National Bank is taking its hands off the controls bit by bit to let market forces decide how foreign currency moves around. The ultimate goal? To create a system that's more dynamic, more efficient, and, well, deeper.
And this leads us to the million-dollar question, doesn't it? The government is making a huge bet here. They're betting that more freedom will lead to more confidence, and that confidence will bring more hard currency into the system. The success of this whole thing really hinges on whether exporters and investors buy into it.
But of course, with more freedom comes more risk. Opening things up can create volatility, especially with the exchange rate. So the follow-up question has to be, how is the National Bank planning to manage that? It's going to be a real tightrope walk. They'll need to watch the market carefully and guide the economy toward stability, not chaos. When you put it all together, it's pretty clear we're watching a pivotal moment in Ethiopia's history. These changes are way more than just technical tweaks to the rules. They represent a fundamental shift in economic thinking. The road to a fully open market is a long one, but this is without a doubt one of the biggest steps yet. And the outcome is going to shape the nation's economy for years to come.